Good morning all, hope you're doing well. It's a slightly late bulletin video today because I was up late last night and I was investigating the API issues that we've been having. You wouldn't have noticed at your end because what I've been doing, I've been kickstarting the API manually every day. And ideally it's not ideal. It's not an ideal situation. Everything should be automated because that's the idea of API. It's an automated thing. So my theory is that when I wake up early in the morning or when I come to it late at night, what happens is that for some reason Chrome closes this window, which is the app script window. For some reason it thinks, oh, you're not using it anymore, I'm just going to close it. So what I'm going to do is brute force it so it won't close because it's going to have a separate window. And then therefore it can't close this window, but it can close a tab. Now by closing the tab, it probably closes the session. So this is my theory. So I won't do anything tonight. I won't do anything tomorrow morning. And then when I wake up early in the morning tomorrow, it should continue to import the API data because it's got a separate window. Right? That's the theory. And that's what I've been testing late last night. So because I'm quite late on the bulletin, it's going to be quite a quick one. And we don't really need to waffle too much. But yesterday, 24-hour difference was a small difference. And so it might still need a flush. VIX is higher than yesterday, and note what the yen bubble is doing and the dollar. Remember, these are safe havens, so if they become strong buy, then it's indicative of risk off. If the safe havens become buy, logically, fundamentally speaking, note where euro and pound are, right, and Aussie too. Yields rose at the long dated but fell at the 3-month and the 12-month. Obviously this is subject to change every hour. These are going to change a lot. We had an inversion on the 3-month and the 10-year yesterday, and it's no longer inverted, which is possibly a good sign. We don't want the 3-month pumping higher than the 10-year because that's like a risk off sign. Okay. And Powell was talking about the yield curve as well, and he's talking about the short-dated yields as well. So he's slightly concerned with these pumping. So you've got to be careful. These going up is a risk-off sign. So they shorted France, but they went long on the S&P. So they cancelled each other out, and then that's that small 24-hour change. They went long on EJ, and they went long on EU, and they went long on AJ as well. Okay, so just bear that in mind. And we've got the BOE today, don't forget, and we've got the US PMI data as well. And then we've got NFP tomorrow. So I'm not going to be doing trade of the day tomorrow, and I won't be trading tomorrow either. It says the dollar strength, which makes sense because the yields are really angry looking and they're pumping, and that's risk off. So yeah, that's that, isn't it? It's the dollar is. I've been saying for a while, do we really want to be fighting it because of the big term, the long term, view of the dollar is that we are strong, and for all those fundamental reasons, those yields, and the risk off nature of geopolitics as well, but yeah, Powell probably it definitely helped the dollar as well. So yeah, Kiwi USD is the only one that would net in a positive result on the month, which is quite scary. So it's from the 4th of October. So yeah, it's quite scary how strong the dollar is. Dollar Swiss leads and the pound USD lags, so that's fine. Yeah, that's fine. That's no worries. Fairly confident on it. We know where our take profit is. No, there wasn't an SL because I don't know where you're going to enter. You might want to wait for it to retrace a little bit higher, or you want to enter now, or you might set an order. But we've got an identifiable TP. I think it will probably get there, but we need to keep an eye on the bubbles. Keep an eye on that yen bubble. Patreon.com, Quasidb, then you're welcome to join. There's any limitation, welcome to join any of those tiers. I recommend that you come along on the Bulletin tier because then you get a taste of what you'll get when you join Discord and you get everything. So what will probably happen, you join the Bulletin, but you might go up and then go on the basic content. It's probably worthwhile because you get so much analysis and so many trade ideas as well, all based on sentiment. So there's the line the resistance line on the S&P. So 39112, 12, sorry, 3912, and that's your resistance line. So we had 3 attempts, and to down we come. So I think it might have been too obvious if we went higher, and then it wouldn't be good for the sentiment. We need to have a little bit of retracement, and it's interesting. We're making a W. Can you see that W there? So you could argue, well, you can probably argue that it's a ABCD, but there's maybe a W here, which would then be a sell at the arrow. Okay, from a harmonic perspective, I'll draw that, what I mean, in Discord. There's a W, so that's the D, is the sell. So they went long prior to Powell, but look at that awful wick. The one that, actually that circle's slightly wrong. It needs to encapsulate the whole price action of that hour, but it's quite scary. They went long just prior to the press conference, and they bought. So you can see they went long on the candle prior. Price went up initially, and if they were savvy, they could have got out, but I probably didn't, and then they got punished. So they went long just prior to the press conference, and they've been buying the dip on the Dow Jones all day. 1, 2, and 3, and so price fell 1, 2, 3. So you can see how it works. Initially, they got paid on that spike. So yeah, and DAX, they've gone long. So down we came. Gold, I think it could have been a stop run by the looks of that. It's pretty horrendous. Your stops would have been around about there, I guess. It may be up here if you were very risk averse, but there would have been a lot of liquidity here in stops because they're looking left, aren't they? So pretty awful, really. And that's gold. So they've gone long. Don't forget we should be falling because they're 71% long, right? So we shouldn't really be going up. Not really. Dynamically, you could probably argue, yeah, but from a static view, the fact that we're so far above 50% that they are so net long, we really shouldn't be going up. It's a little bit naughty, but then there was that dollar weakness that was boosting it, and now obviously that's reversed. EJ is the largest stop loss cluster, and gold was the largest mover, so 10% shifts. EU, GU, NU are agreeing for a sell, and AU is agreeing for a sell. Dollar Swiss is agreeing for a buy, and dollar CAD. So you probably avoid the ones that are mismatching, and you can maybe trade the ones that are matching, but try and get a good entry. And let's have a look now. The VIX was, I don't know if I can get it. Yeah, so the VIX is pumping and the indices are falling, so that would be fine. When I posted this, the VIX wasn't doing anything at all. It's very undecided. And because it's going up, it's going to put pressure on the indices because this is your fear gauge. Okay, so yeah, keep an eye on your VIX. It's very important. And failure rate is high. Well, that's okay. Euro can probably perform a bit better in so much, they went long, so price should be falling a little bit more, and that's why it's got a poor score. Dollar's got a good score because they shorted it and price has gone up on average. Okay. Signals, we had a 21 pip loss. I think we were up quite a bit, but then of course we had the risk event on FOMC and the press conference. So well, it's not too bad. We are up on the week, but it's just been quite choppy. And you've got to be careful. Also, if you are to take any Kiwi cross, remember that the volatility is greater than like a pair like Euro USD. So you want to reduce your risk accordingly. So if it moves twice as much as your pair that you normally trade, reduce your risk in half, and then that will even itself out. And yeah, so there's AU. Remember that the PMI entered contraction territory. We had a -50 reading, and GU is also a sell, but we've got BOE, so avoid that. And dollar Swiss is a buy. So be careful pound because of the BOE basically. Bubbles are agreeing for a sell. The currency pair itself has indicated sell. As you can see there, they've gone long by 6%, and technically on a daily time frame is a strong sell. But because of BOE, it's going to thrash around and it'll probably stop you out. So be careful. It can be very horrible. And there's the BOE there, and we've got the PMI as well from the States, and we could probably argue we need to keep an eye on that as well, on the UK PMI, but everything's been set in place now. So keep calm, always trade safely. I'm going to do a quick 2-minute video now, and I'm going to make lots of coffee because I'm quite tired, and nice filtered coffee I think, and just chill. So I'll speak to you guys soon. Trade safely and have a good day.